Morning all, how are we doing? Morning Stevie, Ladder, Alex, Bontery. I had to think about that one. Morning Johannes, Diamond. How are we all doing? Everybody had a good weekend? I'm just watching the DAX this morning. We got a big gap on the DAX this morning. We closed up at 14,546-ish area on Friday. We opened with a gap down. This is obviously pre-market data, but the actual sort of exchange open, if you like, is down here. We had a little run up towards right at the open, but we're just turning now. So I'm just seeing what happens on this morning, whether or not they're going to try and get this gap filled down this morning or not. Big move if they are. But I'm also testing the new EA, the opening range breakout EA. So I just want to see what that does this morning as well. We've got 5 minutes to the open. So, morning, Themba. Tiamond, I actually took the weekend off. Hardly looked at the charts or tools. Excellent. I did loads of back testing this weekend. I'm back testing my new EA to death, making sure it's really, 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 really broken. Well, trying to break it, but I can't break it. I just keep. It just keeps making money. I can't help it, which is good. I've just been basically this weekend. I've been testing the EA. I've been back testing loads on it. Just trying to make it as robust as I possibly can, basically. So I've been testing like the DAX in the morning, in the afternoon. I've been using a trailer, not using a trailer. I've been using a dollar amount risk as opposed to a percentage amount risk. And it doesn't matter what I do with this EA. Whenever I run around about 8,000 simulations of different settings, I get around about 8,000 profitable results. It just doesn't stop making money. This is tested over 4 years now out of sample, and it still works. So I'm just trying to find, the trouble is now, I'm trying to find an optimal setting. And it's really hard to pick one because there's 8,000 profitable results, pretty much. I think it's 7,000, 7,746 runs out of 8,000 worked out profit. Problem is, what do you pick? So I'm just trying to figure out something that's going to give me a decent strike rate with a small drawdown. But I can't, for the life of me, figure out the best way to do this. If you go with a small trailer, you're going to get a high strike rate of profit, but small profit. If you go with a massive trailer, you're going to get these huge runs where you get massive profit, but you get a lot of gradual drawdown. So I'm just trying to figure out an optimal. NAS performance is off the charts. Really off the charts. $118 payoff on the NAS. It struggles not to make 100 grand a year with the OLB strategy. So I'm figuring it out, but it's a lot more work than I thought it was going to be. So that's going to take a while. Anywho, we'll see how it works this morning. I want to see if it works first of all, because we had a problem with it on Friday. So. Anywho, S&P also gapped. Yeah, everything's gapped. We've got gaps everywhere this morning. Market's heavy across the board. Even the FTSE's gapped, which is unusual. But yeah, so we've got lots of gaps. I want to see if we're going to get this down day today. So obviously we're waiting. Well, I'm waiting for this down day to come and to start this next leg down. The Dow, we're right up at resistance. The DAX, we're kind of hovering at the moment with the DAX. This is kind of next resistance on the daily. We've obviously broken. We've got new market structure to the highs. So I'm expecting at least a pullback. I don't think we are going to go into a bull market. Be very, very surprised with the current economic climate. But if we do, we're at least going to get a pullback on the DAX. But obviously the DAX is way outperforming all the other indices. So all the others just waiting for this down day, big down day. We had a decent down day on Friday, and we've gapped down today on the NAS. The S&P, we had a down day as well. So it is starting. I'm just waiting for that big candle to come in, which we're not getting at the moment. So anywho, excited for the new EA. Yeah, well, it's not. I'd wait until I've tested it before you get excited. I've tested a lot of EA. I've developed. It's definitely in the hundreds of EAs I've developed. I basically build EAs to backtest all strategies. Whenever I've come across a strategy in my life that's looked good, I've built an EA to mechanically backtest it, and I always find something wrong with it. But I can't break this. Then this is interesting because it's the first time I've actually had a strategy that uses a stop loss that I've not been able to break. There's always a downside to it, and the downside with this one is drawdown. You are going to go into drawdown, and it's keeping that drawdown manageable. Okay, so market's open. Yeah, it needs more testing. Keep it and make your millions. Yeah. The strategy is not a secret. The opening range breakout strategy is, some people call it, it's the London breakout strategy, basically. It's a variation of that. The London breakout strategy doesn't work, but the opening range breakout strategy in stocks has worked for decades. People have been using ORB strategies for a long time. So it's not a secret strategy. It's just how you implement it. That's what makes the money. You can do a split position, one position small trailer and second position large trailer. Yeah, exactly, Chris. That's the conclusion I've come to. So with this, just watching this, I've got 4 minutes. The conclusion I've come to is that I need to run the EA twice on each index. One will be with a large trailer and basically a 10% profit target. So basically, the whole idea of the strategy is it breaks and it goes. Those are the days. This is what we're looking for. Days that do this, it doesn't work. It just goes like that. Your account goes like that. When you get those breakouts that work, you get these huge spikes in your P&L. And that's what this is designed to do. It's designed to make a lot of money. What I'm trying to do is get the best of both worlds. So if you run it with a big trailer, you're going to catch those big moves. When you get a multiple day run, that is going to make you 5, 6, 7, 10% on your account. That's what that does. When you use a small trailer, just filter that by drawdown. When you use a small trailer, what you're going to get is lots of profit. Every time it pulls back, you're going to get stopped out, but your P&L goes kind of like that. And it hasn't got these big days in. So you kind of want to run two versions of it. You want to run the strategy with a tight trailer to bank that daily profit, bank that 0.5%, 1% as often as you possibly can, and have it running with a big trailer so you bank those huge days. So you want to run it twice. And obviously run it on the DAX in the morning, on the NASDAQ in the afternoon or whatever. But yeah, that's kind of what I'm trying to figure out, because I want to run it on prop. So I'm trying to, the drawdown is the killer. Obviously you can't, and this is the problem with prop. We know this is the problem with prop. You cannot get a strategy that will not go into drawdown. It will go into drawdown, and it will go into drawdown by more than the maximum the prop allows, and it will bust the account. There's nothing you can do about it. It's just, I'm trying to find a setting that will give a decent return, sort of like 25 to 50k a year, but it will also keep within 10 grand drawdown. And I'm back testing lots of different variations over 5 years to see if they hit it. And I think I've got one. That one here, 7.47%. It returned 50 grand over 4 years. 4 years? 2018, 19, 20, 21, yeah, 22, 4 years. So it never did more than 7% drawdown, and it returned 50 grand. So that's returning sort of just over 10 grand a year, which isn't amazing at all. But you stick that on a 250 grand account times 4, yeah, you're making 100k a year. That's what I'm looking at. I'm running multiple props with it. So that's what I'm trying to do, trying to get one that works with a 100k account, then obviously double it. So I'm making 100 grand, 25 grand a year, and then run that on 4 prop accounts. You're making 100k a year. Obviously minus tax and all the malarkey. 37 seconds left until the 5-minute candle's in. Big opening range this morning on the DAX. We didn't manage to crack that high pre-market, and we're looking pretty bearish at the moment. So ideally, you could discover what market conditions to use to dynamically adjust the trailing distance. No, dynamics don't work. I've tried that. I've tried ATR. I've tried ATR trailing stops. I've tried ATR stops. I've tried ADR based stops. I've tried lots of stops. Did it work? Yes. Good boy. Right, so it's place depending orders, opening range high and low. That's good. It worked. Good, I fixed it. So this was the initial problem I had on Friday, if you remember rightly. It just drew the opening range in completely wrong. I thought I knew what it was and I fixed that. So that's good. So that's working. Excellent. Yeah, I tried ATR for the stops and it didn't work. The problem with ATR is the opening range obviously is massive volume. The opening range candle is always way bigger than the previous candles. So your ATR from this candle onwards, candle 1 to 5, for example, are always way bigger. So you kind of have to use an ATR 1 or an ATR 2 to get current volatility. Problem is, you're placing a trade at the 5-minute opening range, so you can only go on ATR 1. And obviously we get also, after the big cash balance candle goes in, we get smaller candles afterwards. So it's impossible to use ATR. You can't use the previous ATR because obviously as soon as the open comes in, the ATR goes through the roof. So ATR didn't work. I tried it. But anyway, fixed stop. The problem with fixed stop, and again, this is what I mean with EA development and strategy development, there's always a problem that is not fixable. There is nothing that works 100% of the time. Look at the volatility. Yeah, you can't use the volatility in 2022 is totally different to the 2021 volatility. Look at the volatility here. And look at the size of these candles. Yeah, it doesn't work. So you have to come up with a stop loss and just pick a stop loss, and it, some years it's going to be better than others. So it's just impossible to find anything that works. ATR is not flexible enough to work. ADR, I thought, right, we'll go with ADR because obviously we can measure the average daily range, and then when the average daily range is much bigger, we want to use a bigger stop. So I used a multiplier based on ADR. Didn't work. Fixed pips just work better. I think it just works. I don't know why, but it just does. I've always found that with strategies, a lot of the time, fixed pips. Apart from position trading, because obviously that's a slightly different way of trading. But anyway, we will look at the market in a minute. We've got some ADRs this morning as well. Yen's gone mental this morning. It's gone crazy. I just want to watch this. So stopped out on the short entry. No, sorry, triggered on a buy entry. Sorry. Wake up. So triggered on a long. And the other thing I found as well is using a percentage risk on the account is not as good as using a fixed amount. Because obviously if you're using percentage risk and you have a really good day, a really good year, obviously you're going to up your lot size. Then if you have a bad year, you're making a loss much faster. So it's much better just using a fixed amount risk per trade rather than using percentage. As I said many times before, compounding does not work. It's very good in theory compounding, where you just increase your lot size as your account grows. Problem is, when you have a bad run, you make a bigger loss a lot faster. It's climbing up those stairs and then falling down the elevator shaft. Same thing. Timur, it's interesting to listen to you talk through your thought process for EA testing. Yeah, you've got to have a strategy when you're building a strategy. When you're building a strategy, you've got to have a strategy to build a strategy. Yeah, I mean, if you're going to automate anything, it has to be mechanical. So it's got to be really simple rules. And those rules need to make sense. It's got to be logical. And it's got to be, the most important thing is robustness testing. Yeah. And this is robustness testing. This is running 8,000 simulations with different settings and coming out with 8,000 results that are profitable. That's robust. Yeah. Doesn't matter what I pick. I can pick any break-even distance, any trailer distance, any profit target. I can add to trades or not add to trades. It makes no difference whatsoever. I will always make money. That's robust. But you're never going to find a robust strategy that makes you a millionaire. Robust strategies are going to make you money long term, but they're not going to make you a fortune. Because if they did, obviously everybody we'd all be millionaires, wouldn't we? Slow burner, what it is. Okay, so opening range buy stop 2's gone in. She's opening range high 2, so I'm adding to the position. Got a bit of slippage there. 1 pip slippage. So it looks like DAX is potentially going for that gap fill this morning. I've no idea what settings I've got on here. 30. Okay, so next candle, if the next candle's green, we're going to start trailing stops. And moving to break even. We should be break even already on this, actually. Yeah, so we're at break even. So that's a no risk trade. So you're 0.5% in profit. You know, I've got some of these strategies where you're targeting 0.5%. I'd be out now already. Out, done, dusted, made 0.5%. I say that, scrolling through it. That's the NASDAQ. DAX. There you go. Look, so these are all, you can't see, can you? Probably can't see, this is quite small, but these are all 0.5% target. They all make roughly 27 grand. And they're all trailing with 100 pip trailers. So this is literally get in. If the candle goes your way, lock in the profit, break even, and get out as fast as you can. This is true scalping strategy, but it's never going to make you a fortune, is it? Because you're never going to get any runners. You're capping your upside, which is good for stability and consistently banking money, but it's bad for making massive amounts of money, which is why we need 2 variations of it. Seymour, yes, I thought I found it once with gold. Mean reversion EA. Made good money for 3 months, then blew up. Yes, because it wasn't robust tested. It wasn't out of sample tested. Backtesting is the most important thing in backtesting is out of sample. If you develop a strategy like this, yeah, if I go right, and this is a really important thing with any kind of EA that you ever look at. If you sort this by profit, let's go to the NASDAQ on a percentage, which is that one. Right? If we sort this by profit, okay, this made $820,000 in a year, right? Took 32% drawdown, but if I said to you, give me 224 grand, and I will give you 820 grand, most people would snap your arm off, wouldn't they? Right? That's over a year. You go and test this setting of the EA over a 4-year period, it doesn't produce that every year. Some years it produces 25 grand. Other years it will produce 300 grand. But it will have some years of 42% drawdown. Other years it will have a 16% drawdown. Most of the EAs you find on the marketplace or for sale commercially, what they will do is they'll go, right, that one. And they'll use that set file and they will show you the backtest over a 12-month period for that set file. But you put that on the previous 3 years or next year, it will have a completely different result, which is why you need to robust test. I've run this simulation 16,000 times, and 14,800 of those 16,000 it made a profit. So there's only 1,500 variations of settings that don't make a profit. They won't have done any of this. All the commercial stuff you see is just completely curve fit. And that's what curve fitting is. You go, right, that is the best setting over that time period, but that time period isn't going to happen ever again. Yeah, what happened last year on the S&P has got absolutely nothing to do with what's happening this year at all. I can make the best strategy in the world to trade that. This year, boom, not going to work. Didn't work there, worked there, didn't work there, didn't work there. Yeah. If you can build a strategy that works through that, and that, like the opening range breakout strategy, yeah, perfect. That's what you need. Okay, so buy stop 3's gone in, opening range of the 15 minutes. So that's the 3 highs, 5-minute, 10-minute, 15-minute opening range. So see if we get that third one triggered. The other thing I've got to do with the EA as well is test it on tick, because this is working in candle close at the moment, so it only moves stops on candle close. I need to test it on tick level as well, so that it will trail on tick and move to break even on tick. I've found in my basic testing that is nowhere near as effective, because you get stopped out too quick. But anyway, needs more testing that. Right, so we'll let that run and see what it does. Pulling back a little bit at the minute. So news today and this week, we've got a lot of news. Obviously, it's non-farm payroll on Friday. We've got low speaking yesterday overnight. Aussie dollar was weak overnight, and we've had a massive yen strength overnight as well. So we'll have a look at that. I'm waiting for the yen to power up, so hopefully this is it. Today we've got just talking heads. We've got Lagarde speaking and Bullard speaking later on. Tomorrow we've got Canadian GDP. We've got Bailey speaking tomorrow afternoon, and we've got consumer confidence for the US dollar, which doesn't really tend to do an awful lot. We've got CPIs for the euro on Wednesday, employment change, obviously ahead of non-farm on the Wednesday as well. We've got GDP for the US, we've got the job openings, we've got pending home, we've got Powell speaking. So it's a big day for the US on Wednesday. We've got CPI for the Swiss, so that will be a good one to watch as well. We could get some really good CPI figures and good strength coming through on the Swiss franc this week. We've got Kuroda speaking on Thursday. We've got PCE for the US dollar and unemployment, and PMIs as well on Thursday. And then into Friday, we've got unemployment and obviously non-farm payroll. So big day on Friday, and pretty big week. So we've got really good news happening all week, apart from today. Today's the only day we've not really got any volatility planned. But the rest of this week, it's going to be up and down a lot. So overnight, we had Australian retail sales coming out. That was massively negative for the Aussie. So Aussie's really struggling. My Aussie New Zealand is still struggling at the minute. I just can't basically get a break on the Aussie. It's just having bad news after bad news after bad news. But hopefully that's going to start to change. Just triggered into the third position on the DAX long. So this candle close. Got 2 minutes left on this candle. Not quite going to start trailing yet. I've got a 30 pip trailer running on this. So that's news. Aussie dollar. We had a bit of yen talk as well. Kishida was speaking. Not really anything impactive there. And Kuroda was speaking as well. A bit hawkish. So we have got this bullish sentiment coming out of Japan at the moment, which is good, and we are seeing some strength. So as you can see on the chart here, this is the yen. Yen is the strongest currency out there at the moment. Aussie dollar is the weakest. So yeah, big big talk coming out of Japan. We have seen that before in the past, though, haven't we? It doesn't tend to do anything. They talk a lot and don't actually do anything about anything. So we'll see. So yeah, let's look at ADRs. Start off with Aussie dollar yen. Big extension on the Aussie yen this morning. 175. So very, very, very big move. Obviously, we had Aussie came out with negative retail, which tanked the Australian dollar. Yen has been massively strong overnight. If you look at all these ADRs, pretty much all yen based, and then you've got a couple of Aussies in there. You've got the euro odd and the pound odd. You've got euro CAD in there as well. I'll have a look at that one in a minute. So big move down. That's just starting to turn now. You've had a reverse. Oh, no, you haven't had a reverse alert yet. You're just about to get a reverse alert on M5 on that. So potentially this could be the yen move over for the day, and we're going to have a little bit of pullback starting on this. So there could be an entry long on yens. I'd rather get in short on the yen at the moment. We gapped down a little bit on those as well. So Aussie yen very, very, very extended. CAD yen again massively extended. We're down to 125 ADR already on that one. We've obviously got a weak Canadian dollar as well at the moment. I think we've got euro CAD. That's probably hit to the upside, I'd imagine. Yes, we got weak Canadian dollar as well by the looks of things this morning. Euro odd. That's hit to the upside, obviously on the weak Australian dollar. Swiss yen just hit ADR, bounced straight off of ADR. Pound odd, big push up on pound odd. Pound yen has also hit to the downside, and New Zealand yen. So everything yen has hit to the downside with that strength of the yen, apart from the US dollar, which is holding up pretty well. Not far off of ADR though. So very, very, very strong yen. So we'll see if we get any continuation on that. We just had a reverse alert on the New Zealand dollar yen on M15 and M5. So looking at those yens, been looking for some strength on the yen for ages. Finally got it. So we've had the intervention, obviously. Probably better to look at something else like euro. We've had the intervention on the yen. I was waiting for that reversal alert and some strength to take us down below that low on specifically on the euro. The euro I think is probably one of the better ones to trade at the moment. So looking for that market structure to confirm yen strength, and then I think ready to start trading yen short and looking for some strength on it. Been neutral on the yen for absolutely ages off of the back of the intervention, which is a lot clearer on the US dollar, the intervention. Or the interventions, I should say. So been waiting for this to be confirmed. We've had a weak US dollar, which is why that came down. I've been waiting for some yen strength to actually move on its own to confirm that these interventions are actually sticking and holding, and it looks like that is happening. Still not quite got the breaks to the downside on a lot of the pairs yet. So it is there. The strength is there, which is great. So any kind of pullbacks, I think, on the yens, if we get any pullbacks on the hourlies, I will start to look at getting some positions in short on these yens. There was an opportunity last week, early on Monday, to get into a short, but obviously at that point we had no idea whether or not that move was going to stick, and it looks like it is. So a little bit late to the party on the ends, but better to be safe than sorry. I think I'd rather be waiting for confirmation of the yen strength than anything else. So US dollar at the moment, kind of a little bit weak. So looking for US dollar this week to get a bit of a boost off of the figures. So I'm hoping we're going to get some decent figures coming out for the US this week, which will give it some strength. And that will obviously start this tumble, hopefully across the indices as well, that we're waiting for. At the moment, obviously, we're pushing up. We've got the gap fill to do on the DAX. Let's have a quick look at what the other indices are up to this morning. Yeah, they're all pushing. So we've got these gap fills. So potentially the gaps are all going to go this morning, and then hopefully New York will take the indices down. But we'll see what happens. Just got 1.5 minutes. New highs on the DAX. FTSE's starting to rally as well. Nice big drop on the FTSE at the open. So everything rallying across the board at the moment. Not particularly strong. We are making new highs though, just about. So every candle's making a new high and higher low at the moment. So it's not particularly convincing, is it? I want it to just shoot up, which would be lovely, but it's not. Anyway, right, so let's have a look at, so we're going to look at the ADRs. There's quite a few opportunities on the ADRs today. Whether or not you want to be longing everything against the yen at the moment, not sure. I'd be a bit careful. If you're going to trade these ADR reversals, I would use a stop with these, definitely. Just because I don't know how strong this. Obviously, we've got this. This is the Aussie dollar weakness as well as the yen, which is why this one's 175. You've got a weak currency against a massively strong. All the yens have obviously gone, but it's whether or not that is going to continue, that strength. We don't know. This is the first time we've had a really good, strong push on the yen. So it could well just continue for the day, couldn't it? And if that's going to happen, we're just going to creep down and sort of drop down the stairs today. So be a bit careful with these if you're going to trade them as ADRs. But there are opportunities out there. Obviously, everything's bouncing at the moment in London. So had a reversal out on Swiss yen. New Zealand yen, we've obviously already had one. Pound yen, haven't quite got one yet because the pound is weak. But they're all good. Oil gapped down this morning. Big move again on oil. Again, this is another one I'm in at the moment. I've scaled out some of this. We've just taken out this low this morning. We are holding up at the moment. So I can't. This 74 a barrel. This is basically this level from back here. This $73, $74 is kind of that last support area that we were looking at as a worst case scenario. We were looking at this level holding. We're like, yeah, looks like it's holding. If it doesn't hold, this is where I would suspect we're going to come down to and test, which we are kind of on our way to this morning. So I wouldn't be surprised if we get a little bit more movement down. Potentially, we could get an ADR hit to the downside today on oil. But once we get down to there, hopefully we will get that bounce again. A little bit similar to the bounces we've seen in the past. But at the moment, oil is just getting trampled, completely trampled on. So we don't seem to be getting any momentum back to the upside. This is what I was looking to hold, lower the range. It hasn't. So hopefully this is just running liquidity and we will break back above here. So if we do break back above there today, I think we've got a very good chance of moving up from there. But we'll see. Oil's a bit of a pain in the backside at the moment, but anywho, is what it is. DAX just made new highs. Literally just made new highs again. You see trailing stops kicking in now. So just basically just reducing risk as we go. Right. So yeah, so that's oil. Obviously indices, we know we're waiting for that next downward leg to start. So obviously with all the US indices, we're in the bear market. We are just looking for next leg. There's a little bit of room to the upside. Whether or not we're going to get Santa rally, we will find out. It should be this week, basically. It's all going to come down to what happens with the figures this week and with the US. If they're hawkish or dovish, it's really going to, I think, kickstart this rally, which means either we're going to get a weak US dollar and we're going to get a Santa rally, or the US dollar is going to strengthen up and these indices are going to start their next legs. But we just got to wait and see. We're stalled at the moment on all the indices, been sideways for pretty much 10 days now across the board. So, we're not going anywhere. We're in a bit of a range. We keep popping up a little bit, then we drop down a little bit. It's wicky. It's horrible to trade at the moment. And that's the same with all of them, apart from the Dow and obviously the DAX, which has been rallying. So we will see what happens. Nothing we can do on them. We just got to wait and see. But I'm still holding bearish positions. I've got a short on the DAX running, as a position trade. So just still waiting on all of that at the minute. ADRs, RSIs, we've got quite a lot of RSI extensions on the hourlies. Obviously, most of these, as you can see, are all yen based. So we've got these big hits on the ends. Pound odd is also hit as well. So the Aussie dollar obviously has been very weak. So things are taking advantage of that. I'm going to run through all the pairs this morning anyway, so there's no point going through them individually. But there are a lot of RSI opportunities out there. From a bias perspective at the moment, the US dollar, I'm kind of neutral. I can't really make my mind up on the US dollar at the minute. It's been weak, but it keeps showing these signs of strength coming through. So it looks like it's sort of trying to get started. And I think we just need the Fed to come out and say something super hawkish, have a couple of good figures coming out, like job openings or something. We just have some, a little bit of decent news coming out on the US dollar, and I think it will start to rally. PMIs aren't until Thursday. That's probably the biggest thing in the PCE. Those are the biggest things which are probably going to affect it this week. So if we get decent figures there and we don't get any good movement, I suspect non-farm is when they're actually going to start to hike it. So we might find this week it's a little bit up and down, a little bit choppy while we're waiting till Friday to get a move started. But we'll see what happens. Not a lot we can really do until then. Aussie dollar still massively weak. Bearish on the Aussie dollar, bearish on the pound. Everything else I'm kind of fairly neutrally strongish on at the minute, but everything at the minute is just kind of sideways because everything's in the same boat. We've got inflation going up, we've got interest rates going up. It's bullish for all currencies, pretty much, apart from the Aussies who've screwed it up. But when you get bullish against bullish, it's whoever's going to be the strongest, and that's typically going to be the US dollar, and by the looks of things now, the yen, which is great. So it's very difficult to pick biases at the moment. So with a lot of this stuff that we looked at last week as well, you can kind of pick any direction really on a lot of it. Any extensions you get are likely to play out because we're just getting push and pull and push and pull and push and pull all the time. And it's all done by the news. It's all based on the news at the moment. We get some decent figures come out, something pushes. Then we get some decent figures by something else and it pushes back the other way. So everything is just kind of sideways at the moment. That's pulling back. I'm trying not to intervene at all with this. I just want to let the EA run basically and just see how it does. So I'm just I'm trying my hardest not to bank 1% profit when I see it on the table, which is really hard. This is only an evaluation, so kind of, if we get a decent runner, I'm just going to let it pass basically. We just got ADR on Euro CAD as well. Bullish. The rest of the bullish, the indices are bullish at the minute. Still decent move on the NAS, S&P. A little bit of weakness showing in. DAX is a lot weaker than the US indices this morning, as you can see. Right, okay, so let's run through everything, have a look at everything. If anybody's got anything specific they want to look at, obviously let me know, but I'm going to run through all the pairs anyway this morning and have a look at everything. What's up with Bitcoin at the moment? I'm just interested in Bitcoin at the minute, just because I'm expecting this thing to come crashing down super hard, way faster than the indices. And if this starts to come down quick and it breaks these lows, I think that's going to help the indices as well. I'm just waiting to see what happens because everybody's losing their shirts that's in crypto world at the moment. And I'm just waiting for this next leg to start. And it looks like it started this morning. It's certainly done massive downward movement this morning. So I'm interested in watching it. I'm very tempted to take a short on Bitcoin. But I'm too scared because anything, it just takes an Elon Musk tweet, doesn't it? And that things like that. So I'm not going to. I don't trade it. It's very tempting, isn't it, at the moment? Start off with gold. So gold, looking for next leg down on the gold move. So we're obviously very bearish gold at the moment. It's just running the opposite direction to what I would expect, which a lot of stuff is at the minute. I would expect gold with the embargo on Russian gold and the export ban that we should be seeing gold prices rising because there's less of it available. And typical supply and demand means if there's less of it available, it's going to go up in price. But there's obviously enough of it available at the moment that they're not worried. So obviously, bear in mind, this is just another US dollar cross. We just had an ADR on US dollar yen. Sorry, my alerts were on the wrong screen. So this will obviously be going up now because we've just had an alert on US dollar yen, which means US dollar's coming down. So obviously gold's going to go up. So this is just another US dollar cross. Obviously, it's just gold crossed with the US dollar. So with this weak US dollar that we've been experiencing, obviously gold has had a little bit of a push. But if we're going to get that US dollar strength coming through, then we should be looking for next leg down to start. So we had the reversal alert last week on it. We nicely retested, pushed down, and at the moment it's just kind of pulling back. Euro CAD has just hit 125. Is that euro moving? Yes, good, strong euro this morning. Really strong euro this morning. Weak CAD, obviously off the back of oil in the US as well. DAX index is coming down. Just stopped out. Break even on one. So I'm watching this on my other monitor. So that's break even on the opening range high. So that's stopped out, break even. We've got trailer running on those. Let's see if this holds. If we're going to start that next leg down, not going to get the gap. So we didn't actually manage to make it any further than support. Sorry, resistance. See if this is just a pullback. Obviously, we're either going to pull back and go for the gap, or we're just going to tank. Don't forget, we're waiting for that down day. Can I have a look at Aussie dollar CAD? Yep, we'll look at that one in a sec. Oil fragility will bring everything down except the yen and bonds. Certainly bring the CAD down. So I'm just waiting to see if I get stopped out on this other half. I'll have a look at that in a minute. I'm watching it on my other monitor anyway. I don't know why I keep looking at it on there. Right, so yeah. Gold, obviously, yeah, looking for this next leg down to start on gold at some point, but that's going to be reliant on US dollar strength. There is a little bit more room to go up to that support resistance there. So there is a possibility we may get more weakness on the US dollar, obviously, this week. You know, totally possible that can happen. So we will see what happens there. But at the end of the day, I think the US dollar will power up, and I think we will get another leg down on that. So we'll see what happens. But stopped out on those DAXs. So so 300 odd dollar loss on those two. I got some trades at the bank this morning, which I opened on Friday. So I'm up to date overall, but that stopped out on those. So basically what the EA is going to do now is just monitor the situation. And if we go down, it's going to enter a short on the opening range low breakout, and then it will add to that position. and yeah, try and ride the wave back down to the downside. So, but this is the thing, you know, with the, like I'm saying, with the EA, with the development of this, there's so many different variations. Your stop loss, regardless of what you use as a trailing stop or a stop, they all make money, but some will have a higher strike rate than others, and that's what I'm trying to figure out, is what's the best one to use on prop. Because the thing with prop is you want to pass as soon as you can. So I'm thinking with the prop count, to get past the prop account, I want to use a profit target of maybe 1% and have it pass in 8 days, assuming obviously it can make 1% a day. But then again, if it has a runner where I'm going to miss a 4% profit, what do? So you kind of want two versions of the EA running, one to grab those big long ones with a nice wide stop. Because if this thing goes now, if I'd have been using a 100 pip trailer, which gets the big wins, this wouldn't have stopped out. We'd still be in it long, wouldn't we? So it's difficult to gauge. I'm struggling with it in a minute. Anyway, I will keep investigating and update you. So let's run through the rest of the pairs. So the Aussies. Aussie at the moment is very, very, very weak. Now, you wouldn't think that looking at Aussie CAD, obviously, but we've had a very weak Canadian dollar. So it's a lot weaker than the Aussie. So at the moment with this one, we're pushing up into resistance at the moment. So this area here is previous area that we've stalled at when we've been moving up. We stalled again and we've hit it again. So if we are going to start to get some strength coming through on the Aussie, then obviously this is going to continue to fly, but it's more likely we're going to see Canadian dollar strength coming through, and that will be dragged by the US dollar, and then we'll see this hopefully starting to come down. Nice extension on the 4 hour. We had an extension last week on it, which you could have made a nice profit out of. We got extended again. We've got the 4 hour reverse alert. So again, nice move to the downside expected to start on that one. Euro odd has just hit 125 ADR. Euro's going mental this morning. Loads of ADRs this morning. CAD Swiss has just hit as well. So a lot of volatility this morning. Don't forget, this is the first proper full trading day back after Thanksgiving. So there's a lot of volatility, obviously, coming into the market today. So expect some big moves by the looks of things. So yeah, Aussie CAD, be looking for downside on that. If you're going to position trade this, obviously, you can get in with your initial position here. If it fails, you're looking at coming up into some really nice resistance areas. It's roughly sort of, an ADR or two away. So don't see any reason why we shouldn't get a strong Canadian dollar. The fly in the ointment is the Aussie here. We've had such a weak Australian dollar. It is due a pullback, the Aussie. So if that happens, what we'll probably find is if obviously CAD strengthens up at the same time as the Aussie, we're going to get some sideways movements. You might find yourself sitting through some chop for a week or two on this one, but we will see. But yeah, I'll be looking for shorts on it. Long term, the CAD should outperform the Aussie in current climate, but you don't know. I mean, don't forget the main export of Canada is oil, and oil is tanking at the moment. So that is not helping the Canadian dollar at all. So we need to see what happens with that. There's OPEC talks, I think, this week as well. I thought I saw some OPEC, something scheduled for OPEC this week. Maybe I was wrong. No, maybe I was wrong. I could have sworn I saw something saying there was going to be something to do with OPEC, but there wasn't. It's me going mad, don't worry. Obviously, they can announce what they like whenever they like. So Aussie got a CAD, Aussie dollar Swiss. Again, Swiss franc strength at the moment. The figures are coming out for CPI on Thursday, so we'll see what happens there. If you look at the CPI figures for the Swissy, we've had two releases on the trot which have missed. So it's difficult to tell what's going on with this. Obviously, they've kept their rates really, really, really flat for such a long time, and then they suddenly put their rates up out of the blue, and immediately it's got on top of inflation. It's like, what's going on? Why have you got it so right? So we'll see what happens. If that comes out as green, we'll see a big strong move on the Swissy. If it comes out as red, I suspect we will probably see quite a negative move. So don't forget, inflation and interest rate rises are good for currency. It's just bad for economy. It's bad for everybody else, but it's good for a currency. So we'll see what happens there. So when you're looking at your Swissies at the moment, it's all going to hinge on Thursday. So with the Aussie, you can see obviously how weak the Swiss franc has been, because the Aussie has been very, very weak and the Swissy hasn't moved. So we're just stuck in a sideways move at the moment. It's quite volatile, the movement on this. So, you know, we're getting some very good, strong, you can see the RSI. There's a lot of strength, but there's no direction at the minute. So your moving averages are flattening out. We are literally just going sideways. There's not been any positive news coming out on the Aussie. The Swiss has had its fits and spurts of strength, but again, nothing at the moment. They're waiting for the interest rates to figure out whether or not they should be, waiting for the inflation figures to see if they should be increasing interest rates. So when we get those inflation figures, that will tell us what the Swiss National Bank is expected to do with their interest rates moving forward. And as soon as we get that, the market will start to price that next movement in. So if inflation goes up, we will anticipate interest rates being risen. So what the market will do is they will buy the Swiss franc. They will buy the Swiss franc. Aussie Swiss will come down. If it's negative inflation, then interest rates will probably remain as they are or come down. And that in that case, then we will have the Swiss franc weakening. So the market will start to sell the Swiss franc into the next interest rate. So the market tends to price in interest rate movements round about somewhere between 2 to 4 weeks ahead of them. So it's why it's important to keep a track of when interest rates are being announced, because if you draw a line when the interest rates are going to come out, and we're expecting interest rates to rise, for example, on the Australian dollar, we would expect the market to price that in before the event. Yeah. And this is why when you get interest rates coming out not as expected, like we did with the Aussie last time, you get that massive drop, because the market had priced in a 0.5 increase and they gave us a 0.25 increase, and the market went, hang on a minute, you said you're giving us 0.5. We're not happy with that. So they start to immediately sell it off again. So that's why it's important to know when these rates are coming out. But we can't really make any directional decisions on anything Swissy until we get those figures. But I anticipate, like everybody else, inflation should be going up, you know, but someone's got to be first, haven't they, to get on top of it. So, you know, and the Swissy is renowned for being a strong currency. You know, it's a safe haven. A lot of money goes into it. So it wouldn't surprise me if they're getting on top of everything, being ahead of the game. Doesn't necessarily mean it's going to be massively bullish or bearish. You know, the market could well just do nothing. So we'll see. But very difficult to make a decision on anything Aussie Swiss at the minute. Going to quickly run through all the yens in one go again. So obviously, as you can see, we've got a massively strong yen. We've had a few spurts of strength on the yen over the last few weeks, and it looks like we are starting to power up. Whether it's going to become the safe haven it used to be moving forward, I don't know. I've been neutral on the thing for ages, not wanting to get into it, because can't figure out whether or not the intervention, which wasn't an intervention according to them, but obviously it was, because it wouldn't have done what it did otherwise, can't work out whether or not that is holding and whether or not we're going to get some strength. And it looks like this morning we are seeing that. So I'm just looking for some kind of market structure to form. I want to see it form across the board. Yeah. So happening on one currency for me isn't enough. I want to see all these yen pairs doing the same thing. So CAD yen, yeah, doing very, very well. Swiss yen, sideways at the moment. Euro yen, not quite managed to break down below there, because we're quite hawkish at the moment on the euro as well. Pound yen, haven't made any progress to the downside yet on that one. So, you know, I want to see the yen really take control and strengthen up. And then I think, yeah, we're probably going to start trending the opposite way on the yen. So with all of them at the moment, as I've been saying for the last few weeks, I'm much more inclined to hit the sell button on the yen, on anything against the yen, because that, I think, is what's going to happen. And when it happens, you want to be in it and you're going to make a lot of money out of it. So anybody that's shorted anything yen, yeah, happy days. This morning you're waking up to some nice profit. I'd much rather not be hitting the long button on anything. Obviously, you can see it very clearly on the US dollar yen, because when the intervention happens, the money gets pulled out of the stronger currency, which at the moment has always been, the US dollar for the last however long, and it gets pumped into the yen. So the intervention will be done using the US dollar, which is why you see it a lot clearer here. And obviously, as you can see, with the weak US dollar, we're getting some decent movement. So it does look like the yens are strengthening up. So any kind of pullbacks on yens to the upside to go short, I think is probably the best thing to be doing at the moment. Obviously, if they do decide to intervene again, or they decide to increase their interest rates, don't forget interest rates on the yen have been negative 0.1 forever. If they decide to go up to neutral, i.e. go up to zero, or even possibly go positive, the yen is going to go through the roof. Everybody's going to jump on board the yen. So I can't see it doing anything but coming down. We just haven't got any confirmation yet. So it's a little bit early to be jumping on board with a position, I think. But yeah, it's all looking good, isn't it? So everything yen based, I'd be looking for short opportunities on it. So just monitoring now, waiting for hourly pullbacks. So Aussie dollar yen, if we come back up into resistance, potentially you could short that. Might not make it higher than there. If we come back up into this area of balance, we're looking to short it out of that as well. And hopefully by the time we get up to there, if we were to get up to there, we'd be extended on the hourly RSI, and that's what I'm going to be monitoring for shorts. So just watching the RSI dash basically to see if we get anything extended, lit up red on the ends for potential short opportunities. Aussie New Zealand, I'm in this one at the moment still on obviously the other account. I'm just using this one at the moment because I'm just monitoring what's going on with the EA. So yeah, Aussie New Zealand, we have stalled, which is great. So we had that final push to the downside last week. We started to show signs of positivity. We pulled back. We put in a new high. So CAD yen 150 ADR. So market structure, we obviously had the reversal alert and the retest. So the market structure started there. Yeah. And we were expecting pullback push to continue and just start to break new highs and start to get that profit take move on the Aussie New Zealand sell-off. What we've had this morning, obviously, is more negative news on the Australian dollar. So we had the retail sales for the Aussie, which were a complete miss. Extend waivers. That's good. So yeah, so we had the Australian retail miss this morning. So that hasn't helped matters, but the New Zealand dollar is also starting to weaken off a little bit as well. So people are taking profit on the New Zealand dollar moves that have been put in. So at the minute, obviously what we've got is slightly weakening and missed figures this morning. But it is just retail, so it's not the end of the world. If we get some decent inflation figures coming, that will mean more interest rate rises, and we should be looking for more moves. So it's just a case of, I think, waiting on this at the minute. So with the Aussies, with the Aussie New Zealand specifically, I think we possibly have found our peak formation low down here. Want to see this low hold, or at least get run and then push back up again. So if we could get a stop run on this, that's a good spot. So if you're in this and you're stuck in it basically, as I am, this is where we want to be getting in aggressive. And I have taken some profit on some aggressive moves, but again, it's dropped down again this morning. So loading back up again. CAD Swiss, that's a monthly hit. Aussie dollar, US dollar. Again, obviously we've got a miss on the figures. The US dollar's weak at the moment. this morning. So Euro CAD, we've just hit 150 ADR. ADRs all over the place this morning. Lots of movement, lots of opportunity to get into mean reversion trades this morning. So Aussie US, again, US dollar, we should be looking for some strength to come through on the US dollar. This, at the moment, obviously the US dollar is very weak. I'm sort of medium to long term bullish US dollar. I don't necessarily think we're going to suddenly fly with the US. I think it's going to be more of a gradual move, because don't forget, everybody's doing bad at the moment. Even if you're the best at doing bad, you're not strong. So it only takes a little bit of strength from the other currency to drive the US dollar away. So at the minute, we've put in a new lower high. We got the reverse alert on the 4 hour. We were extended, obviously. We started to push down. We need to start breaking some support. So we need to see what happens when we come down and test the support. I'm pretty sure we're going to get a retest of this support coming up. So I'll be looking for shorts on this. I'm looking for shorts on everything against the US dollar at the moment. But we are kind of spluttering and stalling, as everything is at the moment. It's very difficult to find anything that's moving particularly strong, apart from the New Zealand dollar. And the trouble with at the moment with anything you're doing with position trading perspective is it's all driven by inflation and interest rates, and it's very, very, very news driven. So if you get the wrong news coming out, as we had with the Australian dollar, you could be stuck for a while. So we're hoping we get some decent moves off of decent news rather coming out of the US dollar this week. So I'm looking for positive figures across the board. First one's tomorrow. We have got Bullard speaking later as well. So he's hawkish and he starts talking up interest rate rises and etc. etc. Then yeah, we should get some decent movement off the US. But at the moment, obviously not going anywhere. So looking for shorts on that one just to continue the current move. So we're just sticking our head above the parapet, above the 72 moving average. We started potentially that M pattern reversal. So we need to break that low. If we break that low, we should be off. CAD Swiss. Again, Canadian dollar struggling, massively struggling this morning. What's going on with oil? A bit more weakness on oil at the moment. Not that bad, but this looks like strong Swiss franc to me. Let's look at the other Swissies. Yeah, so we've got some decent movement to the upside going in on the Swiss franc. Is that a really weak pound? Oh no, maybe it's not. No, it's not. This is weak Canadian dollar. Look, very weak Canadian dollar. Right, we've got CAD GDP tomorrow morning. So the market's obviously selling off ahead of probably anticipated miss on GDP, which would be the first for a while if they do. So yeah, weak CAD Swiss. Obviously, at the moment, you can see since the Swiss franc interest rate increase, everything has been weak against the Swiss franc because the Swissies put their interest rates up without telling anybody and just shocked the market into a wow, we need to be buying the Swissy. They're getting on top of inflation. Everything's going right at the moment. From a currency perspective, obviously getting on top of inflation isn't necessarily going to boost your currency, but the Swiss franc is a decent safe haven currency. So you tend to find when everything is doing badly, the Swissy will come out of it better than a lot of the others. And obviously you can see that at the moment with this one. So short opportunities, haven't had any way to get into this thing. We had an opportunity for shorts, kind of missed there, but just about there, just wasn't quite extended enough for me to get into. Wish I had, obviously, but yeah, so looking for short opportunities on this, dropping down onto lower time frames, be looking for any kind of short opportunities. So we had a nice entry there, which worked out very nicely. Obviously, that was the 4 hour extension as well. So you would have got that alerted on the hourly RSI extension as well. But yeah, shorts, just haven't managed to get into it. Covered all the ends. So euros at the moment, I'm kind of moving into a bullish stance on the euro, I've decided. So over the weekend, I went through a lot of Lagarde's talks, basically, over the last sort of month or so. So anything that's come out of the ECB, I'm reading between the lines. Things seem to be recovering fairly well at the moment. So all the policymakers basically are pretty hawkish. They're bullish with what's going on. Yields are doing well. European stock market, obviously, as we know, the DAX is outperforming the US markets at the moment. Everything's going pretty well in the Eurozone. Whether that's going to continue will obviously be hinged on the war. So the thing that's holding the euro back at the moment is what's going on in the Ukraine. And obviously, if anything does happen, I've just got into shorts, by the way, on the DAX. So sales triggered on the opening range low breakout. So if we're not going to go up, I'm looking for downward trend. Small RSI alert's gone in. So yeah, I'm kind of neutral to bullish on the euro at the minute, but it's going to be reliant on figures and things continuing to go their way. So the market, I think, is going to be fairly strong euro moving forward as we see what happens with the interest rates and inflation, etc. However, it's not going to take a lot for another currency to beat it down, especially something like the CAD or the US dollar or the Swiss. So I've kind of got a bias in both directions on this thing at the moment. So I'm short at the moment on euro US dollar. But that's mainly based on US dollar strength. I'm expecting the US dollar to get strong, and obviously that will beat down pretty much anything. However, with everything else, you can kind of take either stance, I think, with this at the moment, and it's going to be the other currency, which is probably going to be the one that moves it. But I think on any euro news that we get, we're likely to see a little bit of strength creeping in. Not massive movement like we've had. So this was the buying into the interest rate announcement, and then the interest rate announcement being as expected and continuing on good news. But then we've obviously stalled. So as you can see, the whole market is all driven by news at the moment. It's all about rates, all about good news coming out of everything. If it's bad news, it's just going to come down. So at the moment, things are looking good from an economic outlook, but still massively, massively struggling like everybody else is. They really suffered through COVID because obviously a lot of their economy is built on holidaymakers bringing money in, and that completely stopped. So it put the real brakes on the economy in the Eurozone. But as I say, the stock market is picking up. The DAX is doing a lot better than all the US indices. So things are going in the right direction. So long and short of it, very difficult to make a decision on most of the Euro pairs at the moment. So you could kind of take any kind of extension on this. And as you can see, obviously, we're kind of range bound on Euro odd at the moment because we've had a weak Aussie and we've had a weak Euro off the back of the news. So, the market factored in interest rate rises. We got them and it went, yeah, thanks very much. Now we're waiting for the next thing. Interest rate rises are forecast. And this is what I mean by Lagarde talking up and being hawkish all the time. If that continues, the market is going to buy the Euro into what they foresee as being positive inflation, positive interest rates. So therefore we will price in the next one and get positive movement. When that news comes out, if it isn't what we're expecting, bang, it's going to come down. If it is what we're expecting, we should continue to see, I think, that sort of movement long term on a lot of the Euro pairs, mainly because everything else is doing a hell of a lot worse. So the pound is doing a lot worse. The Aussie is doing a lot worse. The CAD at the moment is doing a lot worse. The US dollar has been, but will probably pick up. So, when you're looking at currency strength at the moment, we've got that as our top three not doing too bad. So it's down there at the moment in number 3, but it is still one of the top performing, I think. and will be moving forward long term. And this is one of the reasons I use these moving averages. This is the long term bias. The 72 is the quarterly moving average. We can see that sentiment has shifted on a lot of the euro pairs long. So the market is factoring in growth. Short term, monthly, we haven't gone anywhere since the last interest rate. That's fine. But if we are going to continue the interest rates, we should see more movement to the upside. And this is why we see the 24.72 bounces. Yeah, it's just the market factoring in the next announcement. So if we are going to expect, if Lagarde comes out today in her speech and says we are expecting inflation to rise, we are going to raise our interest rates by 0.5% in December as anticipated. We are seeing upward growth in this. We are seeing yields growing, blah, blah, blah. Then the market is going to buy the euro into the next announcement, which will be in around about 2 weeks' time. So I think that's kind of what I'm looking at. But again, with anything that I do, I need something to be extended. I want to be getting in at the right time. And at the moment, we haven't had any extensions. We had one last week on this one to the downside, which could have taken. But, it's just chop in the middle of a range. So not the best entry to take. It worked, but that's coming down. Just challenging pre-market lows. So hopefully we get a decent pop at the bottom. So there's the first entry. That's the add-on. So I've added second entry there. So too short. So it's difficult at the moment with the euro, but I'm slightly bullish on it. And it's really hard for me to take a trade on the euro because I've been bearish on this thing for literally 3 years. So trying to flip my mind into we should be buying the euro is a very difficult thing to do. But you can see across the board, against the CAD at the moment, it's off the charts, isn't it? So yeah, pullbacks and longs at the moment, although I would expect potentially the CAD to be strengthening. So any kind of pullbacks, looking for long opportunities. Swiss franc, however, opposite. Strengthening Swiss franc and strengthening euro equals sideways movement. Yeah. So Swiss franc rate announcement, absolutely trouncing the euro. Euro being bought into its rate announcement, and then both currencies being strong together sideways. So this one at the moment, difficult. Look at the moving averages. Yeah. Almost like train tracks. Yeah, just you can't pick a direction on this thing. So the answer is, what's the next news announcement going to be? So we're going to find out inflation figures for the Swiss franc on Thursday. Eurozone news, we've got flash CPIs tomorrow. On Wednesday. So, it's all coming this week for those two as well. So it's a really key week this week for the euro. So we'll see what happens. But this one, again, you could take any extension you like on it, really, and you're probably going to be okay. So if you scale into something and it does push a little bit further than expected, so you got in down there and we push down into these lows, highly likely you're going to get that pullback starting, isn't it? Euro US dollar has just hit ADR to the downside, to the upside rather. Big strong euro. So yeah, euro pound again. Pound very, very weak at the moment. The money flow into the sterling at the moment is just not good, is it? We're not doing well. So it's kind of, I think, the weakest currency out there at the moment, bar your sort of commodity currencies like New Zealand and the Aussies. We rely on services, financial services, and the economy in the UK is just not doing well at all. Our inflation is at its peak, and it's we're probably the worst out the bunch. We're expecting our interest rates to probably be the worst out the bunch. The reason I think we're seeing this weakness in the pound, and I think it will continue, is because it's more likely we are going to get that inflation movement started before anybody else, which is going to be bad for our economy and bad for our currency faster as well. So I can't see anything but downward movement. So when you're looking at something like the euro, if we are going to be bullish euro, this is not a bad thing to be trading as a long, but it's a very low ADR. So you're going to be stuck in this waiting for, I mean, look at this move from there to there. It's, you know, it takes a week or two for you to get anywhere with this thing. So it's not the best thing in the world to trade. But again, I'd probably be looking for longs. But equally at the moment, you could take either on this, I think. Nice move down on the DAX. We've just broken out of that resistance support to the downside. So yeah, so running nicely away to the downside at the moment, DAX. US indices have all returned to mean, he says, looking at the FTSE. Let's look at the US indices. So yeah. So back in the middle. So we may well go range bound from here, but we'll see. See if we get any more downside on these. So yeah, so euros, very difficult at the moment. Euro New Zealand, obviously, we've been very strong on the New Zealand dollar. That is starting to weaken now, as you would expect. Euro potentially going to take full advantage of that as well. So when you're looking at Euro New Zealand long term, obviously it's been very, very, very range bound. New Zealand dollar does power up and weaken a lot as well. And again, it's all based on the news, but New Zealand dollar has always done very well in hard times as well. It did very, very well in COVID. It's probably going to do very well coming out the back of it. So this is going to be one of those currencies that's going to be having a real battle on its hands. Good ADR on it. And again, probably one of those you can take in either direction. But you know, when it goes, it goes. So, I mean, that's not that bit. But yeah, you could well get into a squeeze on anything New Zealand, as we know, Aussie New Zealand at the moment. So I'd be looking for longs on this one as well. We did get extended on this one last week, so there was an entry there. I wasn't really looking for longs last week, so on the euro, but I think moving forward now, I will be a little bit more bullish on it. So kind of taking it in either direction. But euro US dollar, I've got a short on at the moment, so I'm not looking for any longs on the euro at the moment because I've already got a short on here, and this is going to be based on US dollar strength. So again, even if the euro does power up, highly unlikely it would batter the US dollar for too much longer. We're going to get some strength coming through on that. So looking for downward momentum, and then obviously potentially new lows. Or worst case scenario, if the euro is going to strengthen up, we're going to a range, in which case obviously then again you can take it in either direction. But I'm short on this one at the moment. Euro CAD 175 ADR. We just had not speaking this morning. But recession is not a foregone conclusion. Need weaker growth for inflation to return to goal. Yeah, so all this, and this is kind of what I was talking about. When you're what the market's doing at the moment now, from what is being said here, this is all hawkish, which means basically highly likely interest rates are going to have to remain going up for the foreseeable future. If it gets any worse, instead of doing 0.5, we might have to look at 0.75 again, for example. The market will buy that. They will be pricing in an interest rate rise. So therefore, you tend to find buying into the rate for a couple of weeks before the rate announcement. You've seen that buying. So again, this is what I mean by everything is driven by the news at the moment. It's all driven by inflation. It's all driven by interest rates. If we couple that with a weak US dollar, obviously you're going to get a much, much stronger move. So at the moment, we've got a fairly weak US dollar. Again, any kind of news strength out of the US and we'll be flying. So indices coming down today is good because that indicates potentially US dollar strength. So when they stop buying euro and continue buying US, we'll get that move to the downside started. So, but at the moment, again, good indication of what's going on with the euro US. If the euro can beat the US dollar, you know it's massively strong. So again, another reason to start buying euro pairs. If you're going to buy the euro US probably not the best one. Euro yen probably not the best one. Euro pound, Euro CAD, Euro odd, Euro New Zealand, Euro Swiss probably not the best one either. But we'll see. Swiss franc inflation is a miss again. Then yeah, that could be a good buy as well. But from a positions perspective, I'd be interested in longing odd, CAD, pound, and New Zealand from a euro perspective. Obviously, it's already on its way this morning. So anything you see as a pullback, potentially, you could get into long positions on. DAX is coming down very nice this morning. This is the advantage of the opening range breakout strategy as well. You know, and this is what I mean about this. The difference between using a wide trailing stop and a tight trailing stop and a small percentage profit target and a big percentage profit target. If I'd have used a small percentage profit target today, I'd have taken 1% off of there, and I'll be taking 1% off here. So I'll have already banked 2% today. Yeah. Using a wider stop and a bigger profit target, you're not going to bank as regularly, but you're going to catch that 4%, 5% move. There is no right and there is no wrong. It's what do you fancy, you know, and it's down to your psychology. If you can handle your P&L doing that, then wider stops. If you can't handle that and you want to see more of that, very, very gradual growth, but smaller growth probably, then you go for the tighter stops and you bank more often. You know, no right or wrong. They all work. So yeah, so that's euro covered. Morning, Tony. Have you tested the DRIRD breakout? What? As that strategy waits for an hour before deciding the trend. Never heard of it. I don't know what that is. DM me in Telegram. I don't know what that is. DRIRD. Do you mean ORB and you've typed it wrong? or is that some strategy I've not heard of? I don't know what that is. Waits an hour before deciding the trend. Problem with any strategy that waits an hour on indices is the vast majority of your volatility goes in the first hour and a half from the open. So you get the biggest, fastest movement in the first hour and a half. If you wait an hour, for example, where are we now? Right, so this is pretty much an hour here, isn't it? There, that's your hourly candle there. So that's your first hour's movement. Things tend to sort of slow down now. They start to slow down. And if we are going to get a trend, then yeah. But, you know, this is what the opening range breakout strategy does. If the initial push is a false breakout, we catch the real one. So yeah, you could wait an hour. And again, the price action toolkit, you can set that up in here. The Frankfurt Open is 10. I use the 5-minute opening range, but if you want to set that to 11 o'clock, you could take the breakout of the first hour. We can do all of this in the price action toolkit. So, but no, don't know, not really use that. So we've got break even stop. So this one is trailing in profit. This one is at break even. So hopefully we don't get break even on that. This is the problem with break evens. Again, you know, looking at the statistics, break even stops. This makes a big difference. When you move to break even, will have a big impact on your profit and your drawdown. Again, no right or wrong. They all make money. But what do you pick? This is my dilemma at the moment. It's a really nice dilemma to have. It's the first EA I've developed where The dilemma is not to make it profitable. The dilemma is which of the profitable 8,000 or 16,000 in that case strategies do I pick? You're always going to get one. You know, if I'd have used a trailing stop of 200 instead of 300, I'd be out of both of those positions now and money in the bank. It's no right or wrong. It's all profit, isn't it? It's just trying to find the one that maximizes it. Anyway, good problem to have. Right, so there's the euros. So yeah, slightly bullish on the euros. All pounds bearish, regardless. Just don't think the pound is going to do anything. Interest rates, no idea. If the interest rates go up, which they're forecast to do, that's fine. I don't think that's still going to be bullish. Inflation goes up, yeah, it's bullish. But you know, our fiscal policy moving forward and our borrowing is so high on with the pound. It's very hard to find anything bullish or hawkish about it. We will probably see the market buying into interest rates, just be stopped out in the second position, break even. Obviously, oh no, I haven't. Is that just taking another sell? Yeah. So the EA's just put that trade back on again. So stopped out at break even, and it's replaced it because it's told to add to single positions. That's a setting which I'm testing. So what that is designed to do is if we get taken out on a pullback, doesn't mean we're wrong. So I want to stay on the position, but obviously you run the risk of having one stop out, but you will have some profit in the bank to offset that loss. That's the theory anyway. But we'll see. This is why I'm kind of testing in here, because it's good to see it play out live and make sure it's doing what I'm asking it to do. So I'm doing it in back testing, but until you actually see it working out and playing out, you don't know whether it's working properly. Tony, defining range, implied defining. I've never heard of those terms ever. No idea what they are. So no idea. The only ranges I've ever heard of are the cash balance, which is the initial opening range. I've never heard of any trader not using 5 or 15 minute. I've never heard of anything longer than a 15-minute opening range, because that's when the cash balance goes in. Some traders, some futures traders I know, use a 1 minute opening rate. That's where the cash balance goes in. All the money, all the liquidity. If you're a bank, you are sitting there, you come into your desk in the morning, you go, right, what have we got to execute this morning? Okay, we've got 22 million of this, we've got 15 million, right, okay, get that all on the books now. And they basically dump their orders, which is why you get this huge opening range candle, which is called the cash open, cash balance, whatever you want to call it. I've never heard of anybody using anything more than 15 minutes. If you haven't it depends on the size of the orders you've got to execute, but if you haven't executed all your orders within the first 15 minutes, which is why we often see this happen, and this is very common, is you get the initial move, which is the fail. This is because they had to execute a load of long stop positions for customers and for hedges. Once those are in, the speculative positions take over. And that's what the real move of the day is. Screw your customers. Your customers have asked you to do something, you do something. Whether they're right or wrong is irrelevant. And these aren't necessarily, these opening orders aren't speculative. They're hedges a lot of the time. So it doesn't matter if it goes. If it goes down, the reason they've put those longs in is because they're hedging against it going down. And, you know, there's all sorts of stuff going on. All sorts of reasons orders get executed. But I've never heard of anybody using anything longer than a 15-minute. Never heard that terminology, but I'll have a look. But the price action toolkit, you define it. So if you want to use the price action toolkit to test that strategy, just set that to whatever you want. That's the whole beauty. That's why I've made it flexible. I've set it up to what I think the majority use, but if you want to use something different, it will do it already. But yeah, first hour of the day, if you look at the candle on an hourly chart, You know, on the DAX, for example, today. There's your first hour. So yeah, taking a breakout of that. But look at the size of that. A lot of the time, what you'll find on the DAX, look at here, right? So, you know, if let's say that's the opening range, if you haven't made your money in that first hour and a half, you'll sit there like that and not go anywhere. But I don't know. This everything's worth testing. That's one thing I have not tested different times because, as I say, I've always only ever used that 5 or 15 minute, which is what. But you know, it's not a 5 or 15 minute because I fancy those times. There's a reason and a logic behind it because I know that's what happens. That's why everybody trades the open, because they know that this is where the vast majority of the orders are being placed and why they're being placed. You know, it's about knowing not that the car's moving forward, it's knowing how the engine works. But yeah, you can test all sorts of different ranges, obviously, easily. So yeah, pounds. I'm bearish everything pound. So any kind of pushes to the upside. So this morning, pound odd. Obviously, we've got a weak Australian dollar this morning off the back of retail, but yeah, reversal alert M15, which is just retesting. So there's a nice entry short there. Any RSI extensions to the upside on the hourly, like we have here, good to take shorts. I've got too much news Aussie on at the moment with my Aussie New Zealand, so I can't take this, but that's a good short opportunity. We're just taking out liquidity from last week's high potentially this morning. If we break back down below there, we got a good move to the downside. We got a very weak Aussie dollar at the moment, though. So obviously, you know, regardless of how weak we think something is, if there's something weaker out there, i.e. the Aussie, it will go up. We saw that with euro, didn't we? No matter how weak the euro has been over the last 3 years, if you get a weak US dollar, euro US dollar is going to go up. Not because the euro is strong, because the US dollar is weak. And at the moment, we're seeing a massively weak Australian dollar. That's the reason this is going up. It's not going up because the pound is strong. It's going up because the Aussie dollar is weak. When the Aussie dollar turns around and they do a profit take move on that, bang, that's going to start to come down as we get that move kicking in. So like hit short. Good opportunity to get in short there right at the moment. 4-hour extension we had last week here. If you'd have got into that short, you're just sitting in it at the moment. We've got 2 areas of resistance coming up as well. So if we do push higher on more Australian weakness, we've got potential moves to the downside. We haven't got any catalysts at all for the pound this week. We've got low speaking. Obviously, we had low speaking yesterday. We've got low speaking on Friday for the Aussie. There is nothing for the pound this week, apart from Bailey tomorrow. Let's just see where he's speaking tomorrow. Right, before the Lords. Okay. So yeah, we might have actually some potential market moving news coming out of Bailey tomorrow. That's a big one, speaking in front of the Lords. But it's whether he says anything different. You know, if he says the same sort of thing, then yeah. He's very, very, very bearish when he talks. You know, he's very much I ain't pulling any punches, we're stuffed. So I wouldn't be surprised to see the pound come down when he talks tomorrow. Pound CAD, again, same thing. We've got a weak Canadian dollar. That is giving the pound an opportunity to move up, but it's temporary. As soon as we get some CAD strength coming through, assuming we do, obviously, again, CAD's weak as you like at the minute. Be looking for short opportunities, but it's not going to take a lot. You know, this is because of the CAD. As soon as the CAD turns around, US dollar powers up, drags the CAD with it, we're off. So we should see some decent downside movement. At the moment, we're just not getting any strength. Since we got extended, we just haven't had any strength in the CAD. But there's no real move, is there, to take profit on either? You know, it's not like this is a parabolic move where we're expecting a profit take. This has just been grinding on a weak Canadian dollar. So I'll be looking for shorts there. Pound Swiss, yeah, Swissy, at least neutral, if not strong. You know, the Swissy, we have to wait for the Swissy. When the Swissy goes, it goes. You get those big 4-hour candles, usually a few in a row, a bit like that. And bang, you just get the move. So waiting. Nice extension on the 4-hour late last week, which started to push. We've just had a reversal alert. So yeah, that's good for shorts. Again, no reason why we should be looking for pound strength. Yes, inflation figures are going up. Yes, interest rates are going up. But whenever you're looking at these things, when those happen, it's bullish for a currency. But you get to the point where they don't go any further. We will get inflation under control with our interest rates. And as soon as that curve flattens, we will stop interest rate increases, and that will happen. Yeah. So the bullishness that we get on the pound, because they're buying into interest rate increases, it's going to fall faster and harder as well. So can't see any bullish outlook for anything pound wise at the moment. Pound New Zealand, again, this has gone sideways. The moving averages are literally, you can't determine them apart. I mean, that's just not going anywhere, is it? So DAX is falling out of bed. Nice big strong move to the downside. This could be the day. This could be the big day. Let's see. Pound New Zealand and then pound US dollar. Looking for shorts on that one as well. Again, waiting for US dollar strength. This is not going up because we've got a strong pound. This is going up because we've got a weak US. That will change. Yeah. The Fed is incredibly, dovish when it comes out and says it. It's one of those things with the Fed. They really, really push their currency one way or the other. When they come out and say something really, really hawkish or bullish, you will get a big, strong reaction. It's the waiting game, though. We are always waiting for the US dollar, but when it goes, and it will just go bang, 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 bang. We're just waiting at the moment, and when it's not going, everything takes advantage of it. This is probably the weakest thing out there at the moment. So it shows you how weak the US dollar's been, doesn't it? Morning, MK. So yeah, pound US dollar looking for short opportunities. Nice extension on the 4 hour. So if you got into that one last week, I'm short euro US dollar. I won't take the pound and the euro together because they move very similarly. So I'm short euro US dollar. So but there's opportunity for short on the pound as well. So you got the reverse alert on Friday on that one, on the hourly, after that nice big strong push. So got good propulsion gaps in there on that break. Highly likely they're going to come and retest that. Dependent on whether we've got a weak US dollar when we get there. That may well obviously bounce and go into a range until we get some news out of the US. And as I say, we've got it trickling. It's all weak. We've got consumer confidence tomorrow. Then we've got employment and GDP and job openings. And we've got Powell talking. Then the next day we've got PCE and PMIs. Then the next day, obviously, we've got non-farm. So literally every day this week, there is an opportunity for the Fed and for the news to push that US dollar. Equally, obviously, it could get pulled. Things go either way, don't they? But we should be seeing some movement starting on it, hopefully this week. But all depends on the news. New Zealand dollar CAD. New Zealand dollar is obviously massively strong. We've had a massively weak Canadian dollar, so this thing has gone parabolic. Long term, New Zealand dollar obviously is a very small island. Their main export is milk, which I didn't realise. It is. And obviously livestock, etc. A lot of that is to Australia, which is why we see a lot of the time the Aussie New Zealand, sort of grinding around because they're big trade partners. Massively weak CAD, weak oil, strong New Zealand news, everything going right for the New Zealand. Obviously, this thing's gone to the moon. So we should start to see some kind of profit take move on this, at least some kind of pullback if it is going to continue next leg. And again, we just don't know what's going to go on with oil at the minute. So yeah, I like this for shorts right now at the moment. I've got New Zealand dollar CAD short on already. I've been stuck in it. Not stuck in it. I mean, I'm within an ADR on this one. No, I'm not, sorry. I'm 175 ADR. My breakage is there. I'm not particularly worried about it, just because we're 2 weeks now solid where we've had very little profit-taking moves. We've just been flagging and pushing. So the sell cycle is going to start on this at some point. I think we are waiting for oil. Or US dollar news to help the CAD along. Again, CAD and US, massive trade partners. What's good for the US tends to be good for the CAD. So we're just waiting for stuff. We're just waiting. That's what we do, isn't it? Wait. New Zealand dollar Swiss, again, next leg starting potentially on this one. We're just about to get a reversal out on the 4 hour. We started the move last week. We've pulled back again. Swiss franc expecting some strength to come through on the Swissy. Again, we need to see what happens with the interest rates. The inflation figures. It all depends what happens with the numbers, with everything at the moment. But yeah, I don't see any reason why we shouldn't see the Swiss franc starting to strengthen up. So shorts on this one. We're looking for shorts on everything against this Swissy at the minute. US dollar, again, US dollar is weak. Again, like it. Shorts. Any extensions you've got into have all had sort of pullbacks, but again, not enough strength because of the strength of this New Zealand dollar. It's been absolutely flying. So this will weaken, as you get these moves, and this is why we have market structure. Yeah, market buys into strength, it then gets that strength, and then it sells off. Then it buys into strength, and it sells off. It's the profit take moves. It's going to happen at some point. It's just you get these prolonged squeezes when you have one strong currency, and then the other currency weakens at the time that one weakens, and then you don't get that pullback because you don't get the push and the pull, and that's what we've got in the case of New Zealand US, but that will start. We're just making new lows on the Dow. Dow is miles ahead of everything at the minute. I'm just watching on my other monitor. Obviously, the DAX is coming down very nicely. NASDAQ stalling, S&P stalling a little bit. The Dow is ahead of the game a little bit on the other US indices at the moment. We have just... sorry, I was just watching on the other monitor. Yeah, we're just starting to pull back a little bit on that one now. But yeah, Dow's running a lot faster and hotter than the other indices at the moment, so which is good because the DAX is falling in line with that one. Right, sorry, New Zealand's. So US dollars, again, looking for longs on all US dollar pairs. Just waiting for that strength to come through, the next leg of strength. So inflation figures expected to rise, interest rates expected to rise. Market will buy into that. So we will start that movement to the upside ahead of the next rate announcement, next FOMC, which is, I think, 15th. No, not the 15th. When is the next one? Oh yeah. Sorry, no, 14th. That's what I was. Yeah, 14th. So we've got good couple of weeks. So we should see any minute now. Basically, the US dollar should be starting to strengthen up again. Hence why I'm bearish indices at the moment. We should be seeing that US dollar strength starting to come in. Obviously, the CAD's a little bit weak at the minute as well, so we should get some decent movement on US dollar CAD. So had an opportunity to buy back here. Obviously, we got the reverse alert, the retest. We just started to move up, so we had that nice W and market structure. So we're looking for that high to break and then see where we get to. But looking for longs there. So any kind of pullbacks on the hourly RSI, it's just about touched it on those two there. Really not enough. That was a nice pullback there. Took a week to play out, but got it. US dollar Swiss. Very tricky US dollar Swiss. So if you look at this one, again, I'm not trading this at the moment. It's very, very hard to trade US dollar Swiss at the minute. It's just all over the place. So at the moment, we're getting these huge moves, obviously, as one of them powers up, the other one powers up while the other one's powering down, and we're just getting these big swings. Obviously, this move here that we've just had was the Swiss franc powering up at exactly the same time as all that negative news came out on the US, and we had the mother of all storms, obviously. So I'm looking for strength on the US dollar, but obviously the Swissie's equally strong at the moment. So we're not necessarily going to get a big push on this one. So not the best pair out there to trade at the moment, I don't think, US dollar Swiss. It is very range bound, but the swings are very, very big. If you get a range break, likelihood is you're going to get quite a strong squeeze. So again, I just don't like the price action on this. I haven't liked it since it did this. Since we had this massive squeeze, we had the Swiss franc rate announcement in there. Since that's happened, this thing's been very aimless and directionless. So I've not really traded it at all for the last 6 months, I think. Can't remember the last time I traded US dollar Swiss. Very hard. It moves so fast. The Swiss franc moves really quick and really hard when it does. So if you get caught the wrong side of it in a position, it's going to hurt. So I would be more biased long than short, and this is exactly where you would want to be buying. But there's better things out there to trade with the US dollar, euro US dollar, pound US dollar, Aussie, New Zealand. The US dollar Swiss, I think, is probably the most difficult thing to trade at the moment from any perspective. So not really one I'm interested in at all. And US dollar yen, as we know, looking for downside on everything everything yen. So intervention, holding. Even if the US powers up, with the strength that we're currently seeing in the yen, I think we're probably more likely sideways. So potentially range high sales on this one. It may not even get that high. All depends what happens with the US dollar news this week. Don't forget the yen has always been a safe haven, and it hasn't been for such a long time because the policy. Japan has just got it wrong, and they are starting now to do something about it. They've been talking. We see all these spikes where they talk, but they never follow through. They're following through now. So I really wouldn't want to be doing anything but shorting everything against the yen. And again, with the US dollar potentially, continuing to strengthen, this is probably not the best thing in the world to trade, is it? Because you're trading a strong currency against a strong currency. The best trades you're going to find are going to be one strong against one weak, i.e. The pound yen. Yeah, pound is massively weak. Yen is massively strong. So you want to be shorting pound yen. Yeah, pound US dollar strong, yen strong, just equals sideways, doesn't it? So not the best thing. There's much better yens out there to trade. Particularly, I would say at the moment, the pound yen, and the Aussie yen at the minute. But anyway, so that's it. That's everything done. All covered. So yen bullish, US bullish, euro kind of bullish, although I'm really struggling to program my mind to go bullish on it, and bearish all indices. Just pulling back at the moment on that one. Still got 1% on it at the minute. So let's see if we get a runner today. Need some US strength, basically. Drive these indices further down. Anybody got anything else they want to look at, or anything else they want to discuss about anything? Going to stop me out by the looks of things. 0.8. Maybe not. Maybe not. This will be a profit on the day. So ignore that and that, because that was from Friday. But today, so far, we are sitting at two break-even trades, 2 losses, and the losses are 320, and current open P&L is about 420. So if we stop out on these two, it's basically going to be a break-even day, isn't it? Which is what happens. The other thing I'm going to look to do is obviously combine this with a price action setup as well, because obviously with this, the trouble with this strategy, the opening range breakout, is obviously you only get 1 or 2 trades a day. So the DAX will only trade that's it, and then it's done for the day. So you need another strategy to go with this, basically, because you run the risk of having I mean, look at the DAX on the daily, and look at the last week we had. Yeah, so on these days you're just not going to make any money. So there's going to be periods where it's the same with every strategy in the world, isn't it? There's periods where the strategy just doesn't work because the market conditions are wrong. Like a trend strategy, you go into a range, trend strategy fails. I mean, reversion strategy takes over. You go into a trend, the trend strategy starts working, the mean reversion starts failing. So you kind of need to pair the opening range breakout strategy with some other kind of strategy to make sure that you're getting more trades in. But you know, and that's why when you do the back testing with this type of strategy, you see it stagnate for a bit and then it goes. And the stagnation literally is just periods where you've got this sort of price action. You get stagnation, and then the strategy starts making serious money. Because this is a trend breakout strategy, isn't it? So, like with all trend strategies, on rotation days, they don't do very well at all. So we need the ideal, the best sort of trading strategy, if you like, you can use with intraday is you need a trend strategy and you need a mean reversion strategy. So you don't know which, you know, when this day opens here, we've no idea if it's going to be a rotation day or if it's going to be a trend day. We only find that out when New York opens, because we'll either be trended down or we'll be roughly where we were. So you need a mean reversion strategy to also trade and make sure that it will make you money when we have those rotation days. So, and that's what I'm going to develop as a price action strategy to go along with this, I think, which is basically just normal scalping, mean reversion scalping. I've got a really good Bollinger Band strategy that I used to trade, which works off of ATR. I used to trade it on the 15-minute chart, and it's got an edge of about 1.2. Profit factor is about 1.2, and it is mean reversion. So what I'm thinking of doing is setting, just building in. I think I've already got an EA built for it. And the reason I don't run it is because it's not massively profitable. It's profitable, but it's not massively profitable. So, but I think with this making money on the trends and a Bollinger strategy, because the Bollinger we'd be getting in now basically on the Bollinger strategy. God, you can't see that, can you? So Bollinger strategy would be getting in now. So it's basically mean reversion. So what it, God, I can't even remember the strategy. I'll have to look it up again. But basically, it's to do with candle opening outside, pending order under the lows. And if the next candle makes a high, you move the pending up. So the entry would have been there, short. Exit would have been not too far. I mean, it doesn't make a lot. It goes for a 1.5 risk reward. So entry would have been there, stop there. 1.2, I think, was a profit target. So it would be there. So that it would have got me out there. So I would have lost $200 of $300 on the opening range breakout strategy. The mean reversion strategy would have got me probably half to 3/4 of that back. Opening range breakout then starts to work again going that way. Mean reversion would have got me in there and stopped me out there. So, you know, it's horses for courses, isn't it? One of them's making money But the beauty of Bollinger Band mean reversion is you're using pending orders. So you never actually get triggered into a trade unless the trade actually starts to work. So, and again, trailing stop, that one, there's nothing you can do about that. That's a fail, that one here. This is where mean reversion fails. Yeah, when you get one candle in a strong trend day, you get one candle that reverses, and then immediately comes back and takes you out. There's nothing you can do about it. So this is what I was talking about earlier with the 1.5 hour. Yeah, so this opening range 2 here is set to 1.5 hours after the open. This is quite often where you find you've done your move for the day. So I should really be taking 1.7% here, because there's, after 1.5 hours, if you can go back and back test this if you want. After an hour and a half, you will tend to find, if we're not on a trend day, the move's over. So you're either going to get, one of 2 days forming, aren't you? Yeah. On these days where we get this kind of price action, most of these days actually, if you go back and look at these days, usually you'll find after an hour and a half, you've done it. You've done the range for the day after an hour and a half. So you look at the size of this candle now. If we're going to be a trend day, we're going to go like that. A trend day is going to just keep going. It's going to trend us down, isn't it? If this isn't a trend day, that's it. You've normally done your price action. It's a little bit like ADR. Yeah, when you hit ADR, the market's exhausted. It's put all its money in and it's done it fast. You've hit your average daily range, and there it either stops or mean reverts because there's no more money left to move the market. It's done it all. Same with an hour and a half in the stock market. After that hour and a half is in, often you're done. You run out. Which is why I have the ORB opening range 2 low after 1.5 hour and the high. So you will find, I don't know what the odds are, could look it up, but you will find X% of the time a high percentage. What we'll do now is that or that. So again, this is something I haven't tested yet, but taking profit at 1.5 hours in is often a good thing to do. But then when you have a trend day, if we're going to have a trend day today, I'm going to miss out on all that extra yummy profit. Morning, Neo. Yes, you are very late. 10 to 10. Started at 10 to 8. Right. That's me done for this morning. So I'm just going to let this play out. Obviously, we will be trailing at 300 pips. So we'll see what happens with this one this morning. I'm going to do some more testing on the EA. I've got loads of other testing I want to do. So obviously, I've done 16,000 runs. This is on the NASDAQ. I've done 16,000 runs there. I've done 8,000 runs there. There's lots of other testing I want to do just for robustness. But I can't break it. I just want to see if I can get this drawdown at an acceptable level over 4 years, because this is obviously 1 year back testing. The 4 year back testing, I just want to find some settings over 4 years which keep me below 10%. Because if you're going to stick this on a prop account, you've got to stick within that 10K really if you want to keep the account, haven't you? But there is also an argument for going with some of these higher drawdown settings as well that produce, ridiculous amounts of money. I think it's, I can't remember what the highest is. It's something like 800 grand. Not on that one. Was it Nurse Trailer? Can't remember. But yeah, some of these bigger ones which have got higher drawdowns, and again, it's the same old thing, isn't it? If you stick this on the chart at the right time, when it's going into a nice big strong trend, like we're expecting on all the indices, we're here, aren't we? We're expecting next leg to start. If you stick this on now, and historically it's done that sort of drawdown, this type of drawdown, this big 18%, 15% drawdown, which would have blown your prop account, is done when we're range bound. If we're starting next leg, there's an argument for sticking this on there now, passing the evaluation and milking the leg. So you could strategically use this type of strategy to only activate it at times when you think the market is going to start a new leg in a trend, and really, really milk it. I mean, the return on this is huge on some of these, but your drawdown is going to be a lot bigger. So finding that sweet spot, and that's what I'm struggling with. As I say, normally you don't have a lot of options. There's only a few things that work. This one, I've got 8,000 combinations that all make money. So how do you pick? Almost flip a coin, isn't it? But anyway, forward testing's got to work first, isn't it? So, and this is obviously the forward test running now. So we'll see how it goes. Don't get too excited. Anybody got anything else I want to cover? News-wise, obviously, don't need to worry about too much today. We haven't got anything to worry about today. We've got Lagarde speaking this afternoon, so you may get some euro movement, and you've got Bullard speaking at 5. Other than that, we are waiting for first news tomorrow, which is CAD, and then Bailey talking tomorrow afternoon. So I don't think we are going to get anything that's going to move the market unexpectedly today, unless Lagarde comes out and says anything. But obviously, we've had a lot of ADRs already this morning. So there's a lot of mean reversion opportunities out there at the moment. And obviously, the RSI dashboard is also lit up, and it's all yen based. So these yens, you've got really good opportunities to get in some of these yens. But they're obviously all the wrong way. I would be expecting everything to come down against the yen. So you are mean reverting against the expected market direction. So opportunities out there, but they're tricky today with the ADRs. We'll see. Okay, I will update you in the Telegram group if I close anything out or do anything. I'm just running my positions at the moment. I've got Aussie New Zealand long, I've got Euro US short, I've got New Zealand dollar CAD short, I've got oil long, and I've got DAX short. So that's what I've got at the minute. All in drawdown, all squeezed, all waiting for something to happen. I've got an aggressive position on oil pending on M15 here. So I'm looking to get into an aggressive position to bring my average down. My average at the moment is 125, I think, on oil, something like that. So that was, okay, that's a back test with the opening major breakout. That's 4 years. Not bad, equity curve. But like I said, you're going to get stagnation. That's still profitable. It's just not massively, is it? No, this is a slow burner, so to speak. Oil, yeah, 175 ADR on oil. But I took some off on Friday, as you can see. So I scaled out some on oil, and I banked a load of money on Friday before it came down, and we've gapped down this morning below this low. So I've got an aggressive sitting there waiting to trigger on that break on oil. But yeah, tricky oil, slippery. Pound yen saw a huge sell-off, expecting a pullback. Yeah. So all the yens, well, I say expecting a pullback. Difficult to tell with all these yens at the moment. Pound yen's probably the most difficult one to forecast as well, because you know, it's been so unbelievably sideways. But yeah, everything down against the yen. So if you can, I wouldn't be like all these ADR hits today on these yens. I would much rather not take a long on these. The probability is high that you're going to get a pullback, because everybody that's on this is going to need to take profit. When they take profit, they become buyers. When they become buyers, they start buying frenzy, and we get the move. But that's where the propulsion move started. So that is where I'd be like a seller. So you've got two options with these yens. all the yens, New Zealand yen, pound yen, everything yen. Either you can stick a pending under the low and take a continuation short, or you can wait for the reversal alert to kick in to show that we've got a profit take move starting, and then look to sell up there somewhere. We've got resistance. Pound yen, we've got multiple resistances. So one of two things is going to happen if we do pull back, and this is if we pull back. We might not pull back. If this yen move is going to continue, and we're going to start to see buying in the yen, this, nothing to stop 200, 300% ADR days. We get them. But if it's going to pull back, looking for resistance. So you've got resistance there. Yeah. We've got resistance there. Yeah. We've got resistance up there, which is in this area of balance and accumulation there. So you don't know where it's going to go. If it is going to pull back, it's either going to do that, that, or that. And this is why this is such a useful indicator, because when you get a break of resistance or support, you get a propulsion candle, because they eat all the orders sitting under there and we get a fast move. So this shows you where resistance is, yeah? It's not a coincidence that there's a propulsion gap there. It's because of support break. So sell it in the propulsion gaps. Which one? Don't know. Depends how much strength you got in the market. If it pushes, pending order under the lows is also a good trade today. If you want a yen sell. Let's go DAX. So everything's nosediving. Dow's nosediving. NAS is nosediving. So we've broken the low pre-market. So this is the Globex session, obviously, we're in at the moment. So this is the Globex low today, we just broken. Again, when this candle closes, you're going to get a propulsion gap drawn in there. Why? Because it broke through that resistance support. And to do that, it had to build up a massive amount of sell orders, which means we got propulsion move. Propulsion move leaves an area of sellers without buyers. So when we come back and test that area, when the buyers start to buy back into that area, the sellers will add to their positions and drive price back down again. So we've locked in 400, 550. So we've locked in 550 so far this morning. I'm really tempted to close this manually. I really don't want to, because I want to let the EA do its thing, but this is an evaluation, so I kind of also want to pass it. Do I take the $1,200? Don't know. What's my target? $4,000. See, that's like 20% of target done in one trade. This is the again, going back to my back testing, yeah, we're running at 2.4% profit. This column here, if I could possibly move the top of this spreadsheet down, this column is the profit target percentage. Yeah, and you get either tight or let the thing run, really run. There's no versions really that are take profit at 2%, which is more beneficial than letting this thing run to 10%, which is basically saying just keep going until the trailer gets you. But this is, as Seymour has just said, this is what this EA is designed to do. It's designed to catch big moves. It's designed to catch big trends, opening range breaks. So I should let it run. But my entire being is built around mean reversion. And everything in my body is saying, this is going to mean revert. It's going to profit take. These guys are going to take profit in a minute. You know they are. It's going to pull back. And I'm going to get out of it with $600. And I've got 1,200. But I'm going to let it run. Let it do its thing. With all trends, there is an 80% chance a trend will continue and a 20% chance a trend will end. The same way as when you're in a range, there is a 20% chance that range will break, and there's an 80% chance that range will maintain. Whatever strategy you're trading, the 80-20 rule applies. So when we're in a trend, much more chance it's going to carry on, isn't there? Anyway, I'll let you know how that goes tomorrow. Also, obviously, the EA is running on the VPS. So this afternoon, it will be trading the Dow and the NASDAQ. So whatever happens this morning, we will be trading the OLBs of the NAS and the Dow as well. So it's trading the afternoon session. I've also tested this just before I go, out of interest. I've tested the DAX. Obviously, the DAX, I normally trade in the mornings. So this is the DAX AM spreadsheet. So we ran 8,000 tests on the strategy there, and 7,746 made a profit. So there's only 250 versions of the EA settings which lost in the morning on the DAX. I ran it in the afternoon on the New York Open 8,000 times. 6,600 odd passed in the afternoon in New York. Obviously, we know the DAX doesn't move as much in New York Open. It does move in the New York Open because of sector buying, obviously. So if the aerospace sector gets bought in the afternoon at the New York Open, we've got aerospace in the DAX will go. Same as the automotive sector or software sector. S&P is top of the Dow, top of the DAX. So if we get sector purchases in software, the DAX is going to fly as well. So I tested it in purely by accident. Again, a lot of these things you find that work are the last things you'd think. Trading the DAX in the afternoon is the last thing I think of because I'm trading the US indices in the US session. So I accidentally forgot to change the times and I ran it 8,000 times. And I was like, oh, God, that was stupid. I got to run that again. And then I looked at the results and I was like, wow. Yeah, 2/3, well, 3/4 of the results are profitable in the afternoon as well. So you could run the DAX in the afternoon, but I've got it set up only to trade morning. So I could, in effect, set another one up to trade the afternoon. But I'm not going to because I think you're much better off trading NASDAQ and the Dow in the afternoon. You're going to get much more movement, especially in the Dow. But again, look at some of these drawdowns. Yeah, 56% drawdown. So and the big drawdowns are the ones where you are letting it go. You're not big break even, 100 point break even, and an 18 or 180 point trailing stop. So this thing's moving and stopping you out, whereas the much better strategy is keep those trailers tight. You're still going to get on the trades like today. Yeah, this is using a 30 point trailer. Yeah, we've survived that whole move without getting stopped out. Close there, weren't we? But we didn't. That's because I've found that 30 is the optimal for the DAX. But the only way you're going to know that is if you test every single combination and find out what the optimals are, which takes time. 2 weeks has taken all that back testing. Not quick. But hopefully it's worth it. Anyway, I'll let you know what happens tomorrow with this one. And obviously I'll let you know what happens with the NAS and the Dow trades this afternoon. So the risk this afternoon is I'm running it on both. If we get a whipsaw afternoon, I've got a potential of getting stopped out twice, double double risk. So I just want to test it on both of these, obviously. We do get different movement on the Dow. You'll find that the Dow quite often will be out of sync with the NASDAQ at the moment, especially in earnings fortnight, which again, the EA has been running obviously over 4 years. So it's survived earnings being out of sync. So, but obviously there is a danger in running both of these together because obviously they do very much the same thing. So that's something I need to live test and just see what happens, really. But we'll see. We'll see. That's what testing's for. All right. So I'll be back tomorrow morning, 7:50, same time. Where in the world are you? It says 0208 on your clock. Oh, on the VPS. Oh, the VPS. Yeah. I don't know where this is. I've no idea where the VPS is. Not a clue. This is the VPS, so I don't know. It's 10 o'clock in the morning in the UK, but the VPS 2 a.m. I don't know. I'll have to have a look. I don't know where it is. No, this is VPS, so I've no idea where that is. If it's that far back, it's got to be Asia somewhere, isn't it? I suppose. I'll have a look. I'll find out. I've never even thought about it. It's just a VPS. I don't care where the VPS is. It just runs. A lot of people buy VPSs because they want to be close to their broker's servers, and you know the difference between 3 milliseconds. If you're running high frequency trading algorithms for a bank, then yeah, probably you want to be as close to the server as possible. If I get slipped by half a pip because it took 400 milliseconds to execute my trade instead of 200 milliseconds, not really going to make a lot of difference, is it? So I've never ever said I need my VPS to be in this country or anything like that. I just put it where it's put. It is what it is. Locked in, a bit more profit there. So let's see if we can survive this next leg. So good news is we've broken the 1.5 hour low. So there is a good chance of getting a trend day today. If we can survive in a range until New York open and New York tanks it, could pass the evaluation this afternoon. Canada, yeah, it could be in Canada, I suppose. Yeah, because they're US. Yeah, of course, yeah, because it would be ahead, wouldn't it, if it was in Asia? So yeah, maybe it's in Canada. 2 o'clock in the morning. I have no idea. I don't care. It's where it is. Right. Have a good day, guys. And obviously, just bear in mind there's talking heads this afternoon. So the only thing you've got to worry about is Lagarde at 2 and Bullard at 5. So you may get some volatility off the back of those two. Other than that, market's just doing what it wants today, and it looks like it wants to move because obviously it's the first full day since Thanksgiving. So there's a bit of volatility out there. But other than that, I'll be back tomorrow morning, 7:50. Be in the Telegram group today if you need me. Other than that, have a good day. Hopefully it's profitable. And I will see you in the morning. Have a good one.